How is banking changing, responding to these forces in the society and the economy?
Definitely, it's a new environment. We've been facing low oil prices locally and in the region. Globally, we've been facing low interest rate environment. So this is a big challenge for individuals and institutions. That's on the macro side. I think the environment has changed in a number of ways. There's the macro issues, mainly the low oil prices and the low interest rate environment, but there's also the demographic as well. And I think we've heard a lot from the previous panels and the speakers, from our chairman, Mr. Amal Ghanem. It's a young population. It's definitely more technology savvy. So that's, again, it's a changing environment. And the last part is technology. Technology has leaped tremendously. And at Gulf Bank, this is a big theme for us, and it's a big driver to advance in the technology. And today, for example, in Kuwait, the mobile penetration is incredible. It's one of the highest countries. For each person, you have 2 mobile lines, 2 mobile phones. Yet, if we see, in terms of doing business, in terms of actually transacting on your mobile phone, it's minimal. Some statistics show paying utility bills, for example, on your mobile is 2%. Paying or shopping on your mobile phone is 26%. So those are very low numbers. Yet, on the other hand, we have the biggest mobile penetration. So there's a lot of room to grow here. And that's one of the things that for Gulf Bank definitely is one of the drivers in terms of taking the technology forward.
What are the obstacles to SME lending? And I mean, we mentioned just before the panel that, for instance, in the UAE, there's been quite a big problem with SME loans over the last couple of years, that you don't seem to have had that in Kuwait. But what are the obstacles to really growing the SME sector in Kuwait?
For banks, especially, first of all, the risk factor, because here we're restricted in terms of how you price risk. So for SMEs, they require a bigger risk appetite, especially when you're lending. So with that, we cannot move as freely as we wish to price the risk properly. So you have a cap with the loan. So that's one of the biggest issues we're facing. But with the National Fund today, they're moving in collaboration with banks to address those issues, to provide the funding, and have the banks as interface to help them in that process. So I think that's developing quite nicely now, and hopefully we'll see better funding for the SMEs. But funding is part of it. There are other issues that need to be tackled, because you need to create the ecosystem for those SMEs. You need to reduce bureaucracy. You need to make it easier to set up businesses. So I think that is developing as well.
If we can stay on the regulation theme, coming back to fintech, and that was raised earlier on the earlier panel, the impact of regulation and fintech in particular. Tareq, do you feel that there's enough freedom to innovate in banking? I know Gulf Bank has made some important steps in that direction, but where do you feel the regulation, is it right where it is today? Does it need to be more open? What's your view on that?
I think there's a lot of passion and excitement in this field, and I was pleasantly surprised today, if you've been here since this morning, starting with the speech of His Excellency the Governor of the Central Bank, which really set the stage for this new exciting field and how to go about dealing with it. And he mentioned very clearly that at the end of the day, you want to make sure you preserve the integrity of the financial system, yet leave room for this improvement and development in a nice and measured way. And from our personal experience in Gulf Bank, they've been, so whether it's the central bank or the CMA, they've been very cooperative with us. We're excited at Gulf Bank, as you've heard from our chairman, to lead the way in technology. Gulf Bank was the first bank to introduce the biometric security through fingerprints and face recognition. And today we are excited to launch the Wise investment platform. This is absolutely the wise way to invest. We're excited about it. At the end of the day, yes, it's technology, but technology exists for a purpose. At the end of the day, we want to help our clients to invest in an easy, transparent, and cost-efficient way. And technology helps us to achieve that. And that's what we've come up with. We've started with our clients. We've asked them what they need. We asked them what are they interested in? How do they go about investment? And that's how we came about to develop this service. So we're very much excited about it. And I think the role of the central bank, the role of the CMA has been very helpful with us, even though this is kind of, a new development in Kuwait, but they've been working to assist us very well. And we've heard today from other competitors as well that they're getting involved in this field. So I'd like to congratulate them for being the second to jump into this field, and we're happy to lead the way. I hope no one from MBK is listening to me right now.
Okay,
but it's at the end of the day, I'm happy to see all banks get into this. Sure. This is our role. We're here to serve our clients. We're here to use technology to help our clients. We want them to invest in the right way. And I've been involved in investment before technology, and technology is helping me to serve my client in the best way. So I'm very much excited about that.
Your shout on regulation across the board, I mean, whether it's technology related or more on the legal side related to mortgages, bankruptcy, solvency, stabilization, where do you think what do you think is needed next?
Brief thing about fintech, and I think Adil Majid mentioned something very important, that the established firms are protected from fintech, and otherwise they would have really struggled to cope. And that's something we're seeing. There's a bit of truth to that, and that puts a lot of, even with the protection, there's a lot of pressure because if it's not competition, it's your clients who demand that. In the international markets, we've seen the struggle between established firms and the new nimble fintechs. And the trends that we're seeing abroad, that the established firms they're trying, but they haven't really caught up. So we're seeing movement in terms of partnering with those fintechs. And you can see trends in both directions, developing their own and partnering with fintechs. And the thing is, even with fintechs, and that's probably more, even in the local market or abroad, it's a risky area. And those are small firms, and it can be spectacular success, like the carriage or the talabat. But what people don't recognize, for every carriage or talabat, there are probably 10 or 20 failures. So that's the role of the established firm. If you can marry this fast speed of fintech with the establishment and trust of the established firms, then you really have a win-win situation. I think we'll be seeing more of that in terms of established firms coming together with fintechs, the new companies, to really help their clients and do better and bring the benefits of both sides.
This graph that we're seeing here, 64% people in the audience believe that bad loans will decrease over the next 12 months. That's got to be a very positive sign.
No, absolutely. I think even despite the tough environment, but the regulation has been very tight, and at the end of the day, the banks, as we've heard earlier, their capital adequacy ratios, and they're taking a lot of precautionary measures to really deal with this environment despite the low oil prices. I think what would be interesting moving forward is to observe the introduction of the mortgage law, because, as you know, in Kuwait, people cannot get financing for their houses, and I think that's a big gap. And the introduction of this law can change the dynamics. Today, maybe the Islamic banks have a bit of an advantage in that area, but we're all looking forward to have this law in place, and I think that will be a big part of how we see leverage and lending going forward in the future, because I think that will address a topic that's really in need in this market.